But meanwhile, in the Indian markets, we've seen the Nifty hit that one-month high in intraday trade. Eventually, it closed above 17,700. The metal index advanced for the fourth straight session. It was the top sectoral gainer. So within that, you had JSW Steel, even Tata Steel leading the kind of rally we saw in the metals universe. PSU banks have seen a surge. Punjab and Sindh, as well as Bank of Baroda, these were the stocks riding the wave. The Bank Nifty closed above 41,300. And in the broader markets, both the mid caps and the small caps, they continue to move up in trade. But the question is about the IT sector now. Are margins in recovery mode for the IT sector? Is the worst behind us? Because certainly we've seen these IT stocks take a huge beating last fiscal. TCS and Infosys are soon going to kick off the fourth quarter earnings season. TCS is expecting better numbers, but perhaps a lowered guidance. Let's find out where expectations are pegged. And for that, my colleague Anisha is here to walk us through where we're expecting the sector to stand as far as fourth quarter numbers are concerned. Anisha, how does it look?
Oh, well, yes, IT sector is all set to start the earnings season. We'll get the numbers from TCS post-market, so that's the key talking point in the market. But as you pointed out, it's a seasonally weak quarter, and this time around the revenue conversion has been slower than usual, and that's because there has been a macroeconomic slowdown across the board. So the deal signings have been a tad bit delayed, and the revenue conversion too is a tad bit slower, and that's why we are going to see very tepid growth on the top line across all IT companies. If you look at the expectation as far as the constant currency growth is concerned, it's TCS which is likely to lead from the front with a growth of almost 1% coming in. But then there are a couple of companies like TCS as well as Wipro which are likely to perhaps report a bit of a decline when it comes to the top line in the quarter gone by. So that's something that we are watching out for. And Tech Mahindra too is expected to be tepid. As far as the margin profile is concerned, we are expecting some sort of improvement there across the board. It will be larger in the mid-cap companies, but even for the large caps, there is going to be improvement of around 40 to 60 basis points when it comes to TCS as well. Infosys too is expected to report healthy improvement in margins, and that will be driven by improvement in utilization. We know that in last year, there was a lot of headcount and fresher addition that had happened. That will start participating into the revenues this time around, and that's why the margin is expected to be better. Plus, the currency tailwinds this time around is at a 10-quarter high, so that is something that will again support the margin profile of all the companies going forward. But the key, of course, this time around will be on the expectation of how FY24 is likely to pan out, because double-digit growth was a given in FY23. Whether it will continue in FY24 or not is the key talking point. The expectation is it's not going to continue. For Infosys, for instance, we're expecting that the revenue growth guidance will be around 5 to 7% with a margin band of 21 to 23%. For HCL Tech, 2 or 6 to 8% growth will be something that the street will be okay with. The margin is expected to be around 18 to 20%. So very similar to what they did in FY23 itself. For Wipro, there could be a guidance of Q1 FY24 which might tell you about a decline of 1% to a growth of around 1%, so a bit of a broad range coming in. And of course, with respect to TCS as well, it's expected that double-digit growth will not continue, but single-digit of around 5 to 8% is what is expected. Having said all of that, the valuations have become a lot more comfortable. Remember, during the peak times, we had seen the multiples going as high as 30 to 34 times. It's come all the way down to around 24 times as of now. While if you look at the 5-year averages, the likes of TCS and Infosys are trading below the 5-year averages, while a couple of them, HCL Tech, Tech Mahindra, etc., are very close to the 5-year averages. So a lot of decline from the highest point of the multiples, but in line with what we have seen over the 5-year as well. Specifically talking about TCS as well, with the numbers are expected. TCS is likely to lead the revenue growth with a number of around 1.1% on the top line. Margin expansion to 40 to 60 basis points. But the eye would be on the management transition, the headcount addition, as well as the possibility of buyback, because ICICI Securities there is expecting a 20,000 crore buyback. So that is something I'm watching out for.
All right, Anisha, those gives us the talking points really as far as the IT sector is concerned. To break down the road ahead for the sector is our analyst who's joining us, Reliance Securities, Mitul Shah. He heads research there. Mitul, it's great to have you with us on India Tonight. You know, it's generally, like Anisha was saying, a weak quarter for the IT sector. But how telling an impact do you see on the sector because of the global slowdown, for one, cut in IT spends in general, and this would have been further beaten down the sector. Also, the banking crisis would have its impact. How do you think it's going to pan out?
As far as this sector, pricing of this there are order wins in past which will definitely support the revenue this time, and margin is also expected to expand sequentially because of the lower cost pressure. Attrition already started declining since last 2 quarters, so that should help. And also other cost parameters are also in control in terms of net employee addition. Last quarter was more or less flat. This time also we expect net addition of employee would be largely flat sequentially. So margin expansion is expected for across the companies, and revenue would be more or less flat to marginal growth, with probably TCS would be reporting one of the highest growth of around 2% kind of a sequential growth. But key thing would be management commentary. Management commentary we believe would be much more cautious compared to Q3 commentary, and outlook for FY24 and guidance will be very important for the stock price movements.
While the Nifty has been under pressure in general, the IT index has managed to eke out some gains in the fourth quarter. So what are the factors that have helped IT stocks move against the tide, so to speak?
Yeah, not getting. Can you say again?
No, I was talking about how the IT sector, the index, has done as opposed to the Nifty. The IT index has done better than what the Nifty has done in the fourth quarter. What do you think are the reasons for this?
See, IT index has definitely outperformed strongly compared to Nifty with a positive return. The reason being IT index was under pressure across the companies were under pressure during Q3 and Q2 because of this all this US recession likelihood, and probably Fed rate continue to increase the rates, liquidity crunch, all those parameter led to significant correction in the stock prices from the peak level. So part of that got recovered after this Accenture result, which was a slightly positive surprise in terms of the revenue as well as margin. And that also order book was also reasonably strong for Accenture. That led to regaining some confidence in investor for the IT space, which helped outperforming IT index. Though guidance for Accenture was also not very strong, and probably outlook for next year is also a bit cautious, but stock prices and valuation help companies to regain partial recovery.
So then do tell us, with all the factors that are at play, Mitul, do you believe that the worst is over for the IT sector? Because among the big players, even if you look at the performance of TCS, Infosys, Wipro, HCL Tech, who has been able to weather this storm of FY24 better and is poised for higher growth, according to you?
See, all this company has a really well diversified business vertical as well as geographical diversification is there. But somehow when entire world except few countries is under a tremendous stress in terms of macros are slowly adversing, currency is going adverse, and most of these countries facing huge inflation pressure, and that is also resulting into kind of a slowdown, may not be recession, but of course this slowdown which recently this we have seen in the banking sector in US economy. So all those parameter would certainly has a negative impact on FY24 performance of all these companies. So it may continue growing, but the pace of growth will come down as compared to past performance of few years of double-digit revenue growth. Now it would be close to double-digit or a single-digit revenue growth possible for FY24, and certainly margin expansion may be very limited considering the operating leverage impact. So performance would continue to improve, but pace of improvement would be much slower. And as highlighted by many management in past few months, that there is a clear-cut delay in decision making by major clients of all these IT service companies. So despite there is a strong order book or a strong pipeline, a conversion into the revenue would be much slower, and that will impact FY24 performance of all the companies.
Well, we'll keep watching out for the numbers as soon as they come out. Of course, we'll be analyzing them and breaking them down. And the commentary, like you said, is going to be important to watch, especially when it comes to the impact of the banking crisis that has unfolded. the kind of tailwinds from the currency moves. And of course, we are going to be looking at what they see by way of future deals coming through. But thanks very much, Mitul Shah, for joining us with your perspective on the IT sector. Great to have you with us this evening on India Tonight.